The U.S. manufacturing sector continued its rebound in July. Here's a way to see that. A chart showing new orders for goods that typically last 3 years or longer. After declining sharply following coronavirus lockdowns, new orders rose to about $230.7 billion in July, but still remain below pre-pandemic levels. Counting new orders for long-lasting goods can reveal whether manufacturing activity is expanding or contracting. That can point toward changes in the economy's recovery.
It gives you a sense of where things are headed. So it counts orders that, in a lot of cases, that retailers make to manufacturers. So if you're a retailer, a major retailer, and you're ordering a bunch of products, say a bunch of dishwashers, that's because you're pretty confident you're going to be able to sell them pretty soon.
The first thing to know about the durable goods indicator is what it measures. The number begins with a survey of about 3,100 manufacturing companies across 92 categories in the United States. The businesses report on how many new orders they filled to produce longer-lasting durable goods. There are two types of goods. Non-durables are consumed quickly, like paper, food, or gasoline. And then there are durables. That count includes construction materials like lumber. It also includes firearms, office chairs, tape measures, and computer hard drives. It includes DSLR cameras and VR headsets. Medical equipment like electrocardiography machines or gurneys are durable goods too, as are pieces of fine jewelry and books. It also includes items that are really expensive and aren't purchased that often. Products like heavy machinery. For example, these conveyor belts are durable goods. Economists track the increase or decrease in the new orders on a month-to-month basis. If more new orders come in this month than the last, that could point toward an economic expansion. That's because one new durable goods order can signal future activity. To see that in action, here's an example. A farm might need to purchase a tractor, so it places an order. The tractor manufacturing company then places orders with a number of other companies who produce parts like engines, windshields, and lights. Each of those suppliers sends orders to manufacturers for raw materials and other durable goods. The indicator can also capture the ripple effects from a bigger national trend, like housing sales.
Suppose, say, home sales are doing really well, like it turns out they are right now. It's conceivable, it's possible that a bunch of people are going to start buying long-lasting appliances for their homes, and that in turn will cause the retailers of these long-lasting appliances to order more from manufacturers.
The Durable Goods Survey captures the manufacturing activity that's connected to business activity. In this case, the purchase of a home. Many manufacturers track these new orders and send the data to the Census Bureau. Most of the manufacturers in the survey have $500 million or more in annual shipments, but it also includes some smaller firms to make the sample more representative. Economists, investors, and analysts watch for changes in the numbers, which are released monthly.
Its main use, really, is it feeds into the GDP report, which is this very closely watched indicator.
Durable goods can provide early insight into economic patterns, but the indicator is not without flaws. Of the many items that are counted in this survey, some are outweighed and can obscure changes elsewhere in manufacturing.
One thing to keep in mind about the durable goods report is that it's very volatile, and the sources of volatility are things like aircraft.
To see a better proxy for business investments, you can look at the non-defense capital goods excluding aircraft. It's a subsection of the Durable Goods Survey.
That gives you a better sense of kind of the trend, which is really what we're looking for here.
Excluding aircraft makes a significant difference in the data. For example, in some cases, a new Boeing jetliner can cost between $50 million to over $200 million, and its supply chain stretches to over 12,000 companies. But production of new Boeing planes has stalled, following 2 fatal 737 MAX crashes and a pandemic-driven collapse in air travel. 500 jet orders were canceled this year alone, and new orders have slowed to a trickle. Boeing's troubles have overshadowed other manufacturing activity, which skewed the durable goods survey results.
It made the durable goods number look very strange because you had all these aircraft orders that weren't coming in. So, a few major categories like that can really skew the results.
Public spending on defense can do the same.
Things that the military buys are also included in this report. So if the Pentagon puts in an order for a bunch of fighter jets or a bunch of tanks or something like that, that shows up in the report. It's hugely expensive. It will really sort of bump up the numbers for that month. But it doesn't really tell you a whole lot about the overall state of the economy. It's just the Pentagon has made a bunch of orders for tanks.
The Durable Goods Survey captures ripples of economic activity across manufacturing. But economists look beyond the headline number for a more meaningful view of where things are headed.